All right, so let's put those super dry accounting textbooks aside for a bit
Yeah,
and dive into something a little bit more interesting, a little bit more exciting, right?
definitely.
Auditing.
Yes.
And don't worry, we're tailoring this whole deep dive specifically to you guys, our awesome CA interstudent listeners.
Absolutely.
You know those exams are no joke.
Definitely not.
So we're going to make sure that you're well-equipped to tackle them, right?
Yeah, we're going way beyond those, surface level definitions. We're
Right.
going deep.
Love it.
We're going to be exploring what an auditor really does, on the ground, the
Yeah.
limitations that they kind of bump up against, and why even a company that's focused on, let's say recycling
Right.
needs that sharp audit eye.
Okay, I love it. So let's kind of break this whole thing down, right? Starting
Yeah,
with the basics.
absolutely.
What exactly IS auditing?
That's a great place to start.
I mean, we know it involves numbers, but is it just about making sure that like 2 + 2 = 4?
Right. It is about numbers.
Yeah.
But it's so much more
Okay.
than just checking, the addition and subtraction.
Okay.
Think of it like this. You're a detective,
Okay.
but instead of a magnifying glass,
Uh-huh.
you've got financial statements.
Oh, okay. Interesting.
And your job is to kind of investigate
Yeah.
whether those statements are painting a true and fair picture
Got it.
of the company's financial health.
Okay, so I'm starting to get that detective analogy a little bit better now.
Yeah,
So it's about kind of uncovering that truth
exactly.
behind the numbers, right?
Yeah.
But how does an auditor actually do that?
Good question.
What are they looking for?
Yeah, so the main objective of an audit
Okay.
is to obtain what's called reasonable assurance.
Okay.
And this is really, really important for our CA Inter students to
Right.
understand
Look that up.
what does that mean.
Yeah.
It means that the auditor is aiming for a high level of confidence,
Okay.
but, and this is key, it's not an absolute guarantee.
Hold on.
Yeah,
Why not an absolute guarantee?
right.
If an auditor is doing their job properly, shouldn't they be like 100% certain
Right. And that's where those
about everything?
limitations come in that we mentioned.
Right.
Even the,
Let's say-
most skilled auditor
Yeah.
cannot be absolutely certain about everything.
So what are some of those limitations?
Well, think about it, like financial reporting,
Uh-huh.
it involves a lot of judgment calls from management.
Okay.
There's an inherent subjectivity involved.
Right. Okay.
Plus,
Yeah.
auditors can't examine every single transaction.
Right. That makes sense.
They have to use what's called sampling techniques,
Okay.
which means
Yeah.
that there's always that chance they might miss something.
Okay, so it's about gathering enough information
Right.
to be confident, right?
Yeah.
Highly confident,
Yeah.
but acknowledging that there's always some level of uncertainty.
You got it.
Okay, now I'm curious about, like, what kind of evidence
Yeah.
are we talking about here?
Yeah.
What are auditors looking at?
They're looking at, invoices,
Okay.
contracts, bank statements,
Right.
inventory records,
Got it.
minutes of meetings.
Oh, wow.
You name it.
So really anything.
If it relates to the company's finances,
Yeah.
the auditor might want to see it.
Okay, so they're really digging deep, right,
Yes.
into the company's operations,
They're not just skimming the surface.
not just skimming the surface.
Exactly.
And then in all of this evidence, like, what are they looking for?
That's a good question.
What are the things that are going to, raise a red flag?
They're looking for what are called misstatements.
Big statements, okay.
So basically, things that are not presented fairly
Right.
in those financial statements.
Right.
And these misstatements, they can be unintentional errors,
Oh, okay.
like a simple math mistake,
Yeah.
or they could be intentional fraud, which is obviously
yeah.
a much bigger deal.
So this is getting into some serious territory now.
Yeah.
So essentially, like, an auditor's role is to protect the people who are using
That's right.
those financial statements.
Yeah.
Investors,
You don't-
lenders, right?
Absolutely.
Anyone who is using those financial statements to make decisions.
It's all about providing credibility
Okay.
and assurance to
Stop
those
that.
who need it.
Okay.
Think about it.
Yeah.
If you're lending money to a company,
Right.
wouldn't you want to see some audited financials?
Absolutely, to make sure that they're not,
Yeah,
hiding anything.
exactly.
Okay, so we've got our detective
Yes.
who is searching for those clues,
Very
right?
exact.
Or misstatements
Or statement.
to make sure that those financial statements are telling the truth.
You got it.
But you mentioned that auditing isn't just about numbers.
That's where it gets really interesting
But
because what else comes into play? Auditing requires a really diverse set of skills.
Okay.
Of course, you need to understand accounting principles.
Right.
But you also need a grasp of the law,
Okay.
behavioral science,
Oh, yeah.
statistics.
Wow.
Even economics and financial markets play a role.
Wait. Behavioral science.
Yes.
Why would an auditor need to understand psychology?
Well, think about it.
Okay.
Auditors have to interview people. They have to assess reliability of the information that they're getting.
Okay.
And they even have to detect potential fraud.
Right.
So understanding human behavior and motivations, it's a huge part of all of that.
Okay, so it's way more multifaceted than I initially thought.
It is.
Okay, so we've got our auditor armed with all of this knowledge, right? All these skills.
Right.
Digging into a company's financials.
Yes.
What exactly falls under their scope?
That's a good question.
Like, what are they allowed to look at? What's off limits?
So generally, an auditor's scope is very broad.
Okay.
It covers all aspects of the business that could materially impact the financial statements.
Okay.
They can examine any documents, records, systems that they deem relevant to their assessment.
So no stone unturned, right?
Pretty much.
Okay, but are there any boundaries?
That's where the limitations come in.
Okay.
So while an auditor's scope is broad, it's not unlimited.
Okay, so give me an example.
Okay, so let's say could an auditor inspect the physical condition of, like, a company's building or verify the authenticity of their legal documents?
Got it.
Not really. They're not building inspectors or, forensic document examiners.
Okay.
Their focus is really on the financial information and the systems and processes that generate that information.
Okay, so they're not going to be, crawling through ventilation shafts or anything like that.
No, but they might look at maintenance records to assess the accuracy of, let's say, depreciation expense.
Right.
Or review contracts to verify the terms of, a lease agreement.
Okay, so they're kind of connecting the dots, right?
It's about connecting the dots.
Between the physical world and the financial world.
Exactly.
Okay, so they're focusing on the financial implications.
That's right.
Of the actions, even if those actions aren't themselves.
Exactly, precisely.
Okay.
So, for example, let's say you have a manufacturing company.
Okay.
And they're valuing their inventory.
Okay.
The auditor needs to understand not just the accounting rules for inventory valuation, but also the company's specific production processes, their storage methods, even the market demand for their products.
Wow, okay.
So it's about understanding that bigger picture.
The bigger picture, not just the numbers in isolation.
Exactly. Not just the numbers themselves.
Now, I'm curious about something you mentioned earlier.
Yeah.
The limitations of auditing.
Yes.
We talked about inherent limitations of financial reporting. And the fact that auditors can't examine every single transaction.
Right.
But are there other limitations that our CA Inter students should be aware of?
Yeah, so a major limitation is that auditors have to rely on information that's provided by management. They can't force people to be truthful or to hand over every single document. There are legal and practical constraints to what they can access.
So even if an auditor suspects something,
yes,
like, fishy is going on,
right,
they might not actually have the power.
Yeah, unfortunately, that's sometimes the case.
To fully investigate it.
Yeah, and even if they do uncover potential fraud, their primary responsibility is to report that to the appropriate parties within the company.
Got it.
Or to those charged with governance.
Okay.
They're not actually conducting a criminal investigation.
Right.
That's a different
ballgame.
Ballgame altogether.
So there's a really clear distinction between an audit
That's right.
and an investigation.
Exactly.
Right.
An auditor's role is to assess the fairness of the financial statements.
Got it.
Not to catch criminals.
Right. But that doesn't mean that they just turn a blind eye.
Of course not.
To any potential wrongdoing.
Absolutely not.
They still have to raise flags.
They have a responsibility to raise those red flags.
And ensure that appropriate action is taken.
Exactly. And that's where professional skepticism comes in.
Okay, talk to me about that a little bit.
Yeah, so auditors need to maintain kind of a healthy dose of skepticism throughout the entire audit process.
So they can't just take everything at face value.
Yeah. They can't just take everything at face value. They need to be asking those tough questions. challenging assumptions.
Okay.
And digging deeper when something doesn't seem quite right.
Okay, so they need to be critical thinkers, right?
Absolutely.
Not just number crunchers.
Yes.
Okay, critical thinking is key.
And that actually brings us to another limitation that we discussed.
Right.
The fact that information can become outdated.
Right.
Can you kind of elaborate on that a little bit more?
Yeah, so think about it like this.
Okay.
An auditor might be examining, let's say, a company's inventory levels at a specific point in time.
Okay.
But those levels can fluctuate rapidly.
Okay.
So by the time the audit report is issued, that information might already be stale.
So it's like taking a snapshot.
It's like taking a snapshot.
Of a moving target.
Exactly.
The picture might be accurate at the moment, but it doesn't tell the full story.
Got it.
Of what's happening over time. Exactly.
Okay, and then there's, the biggest limitation of all.
Which is?
The future, right?
Future.
Auditors can't predict what's going to happen.
Exactly. They can't predict what's going to happen tomorrow, let alone next year.
Right, so they can assess...
They can assess past performance and current conditions, but they can't foresee unforeseen events.
Right.
Sudden market shifts, things like that.
So, like, if a company is about to be hit by a major economic downturn or some crazy change in, consumer demand, the auditor can't be held responsible. We're not predicting that.
They're not fortune tellers.
Okay, right.
They're providing assurance based on the information that's available to them at the time of the audit.
At the time of the audit. Got it.
Yeah.
Okay, so we've established that even with their best efforts, auditors can't provide those absolute guarantees.
Right.
But even with all of these limitations, auditing is still a critical part.
It is.
Of the financial system, right? Like, why?
Because despite these limitations, audited financial statements provide a vital layer of assurance and credibility.
Got it.
So they give the users of those statements, investors, lenders, a much higher level of confidence in the information that they're using to make those decisions.
Okay, that makes sense.
Yeah.
And speaking of different types of assurance, it's important to remember that audits are just one type of assurance engagement.
That's right.
Right. So there's a whole world out there.
There's a whole world out there.
Beyond these traditional audits.
Think of it like a spectrum of assurance.
Got it.
So audits are at one end, offering, the highest level of assurance.
Right.
But then you have other engagements like reviews, which offer limited assurance.
Okay.
And then there are engagements that focus on very specific areas, like future projections.
Right.
Or internal controls.
So, like, reviews are like a quick checkup.
That's a great way to put it.
And audits are like the full
medical exam.
Medical exam.
Yes.
Okay, so
and then those other engagements, like future projections, they're more specialized.
Okay.
It's like getting an X-ray of a specific area.
Okay, so it just depends on the needs of the users of that information.
Exactly.
Sometimes they need that, really comprehensive assurance.
Yeah.
Other times they might just need a more targeted assessment.
Exactly. Yeah. And no matter what type of engagement it is, there are key elements that are always present.
Okay, what are those?
You've got the practitioner, who is, the auditor or the reviewer.
Okay.
You've got the responsible party, which is the company being audited or reviewed.
Okay.
And then you have the intended users. Those are the people relying on the information.
Got it. Okay.
So you got the subject matter, which is, what's being examined.
Right.
The criteria used to evaluate it.
Okay.
The evidence gathered to support those conclusions. Yeah. And then finally, there's the written assurance report.
Right.
Which is the culmination of all that work.
Okay. And speaking of ensuring quality
and
consistency in all of these engagements, we need to talk about auditing's rule book.
Which is?
The standards, right?
The standards, exactly.
So just like a cricket match, right? Needs rules. Auditing needs these standards to make sure that everything is done properly.
Exactly.
Consistently
and effectively.
So what are some of the key standards
all right, so there
our CA Inter students should be aware of?
Auditing standards, of course, which provide guidance on how to plan, perform, and report on an audit. Then you've got review engagement standards, which are specific to reviews.
Okay.
And then you've got assurance engagement standards,
Got it.
which apply to all types of assurance engagements, even those that go beyond traditional audits and reviews.
So it's like a hierarchy, right?
It's a hierarchy of standards.
Okay.
Yeah, each one building upon the others.
And these standards are really there to help auditors, right?
Yes.
Perform their duties effectively.
Yes.
And give those users of financial information
right.
for confidence.
Exactly. They're the backbone of the auditing profession.
Okay.
They help to ensure that audits are conducted with integrity,
got it,
objectivity, and professional competence.
Okay, so we've covered a lot of ground here.
We have.
We've talked about what auditing is,
Yeah.
why it matters, how it's done.
Exactly.
We've explored the objectives, the scope, those tricky limitations. Those limitations.
But how does all of this theoretical knowledge translate into, real-world scenarios?
Yeah, that's a great point.
I think our listeners would really love to see
I agree.
how these concepts actually play out.
I think so, too.
In practice.
Let's do it.
Yeah, let's put it to the test.
Yeah.
With some case studies.
Absolutely.
That are specifically relevant to those CA inter-exam patterns.
I'll do it.
So we're going to explore some scenarios involving shareholders.
Okay.
Environmental issues.
Right.
Impacting a company.
Yeah.
And even some of those ethical dilemmas that an auditor might face.
I love it.
So case studies are a great way, right?
Yes, they are.
To bring these concepts to life.
Yeah.
And see how they apply
Absolutely.
all these different contexts.
Yes.
So I think our listeners are going to find them.
I think so, too.
Super helpful, especially as they prepare for their exams.
Great point.
So are you ready to dive into?
I am. Our first case study.
Let's do it. Okay, so for our first case study, let's picture this, right?
Okay.
We've got Lalji Pai.
Okay.
He's a shareholder,
All right.
and he's invested in a company that's listed on the National Stock Exchange.
Got it.
And he's feeling pretty confident, He's looked at the company's audited financial statements, and everything seems to be in great shape.
Right.
Strong turnover, low debt, healthy profits.
Got it.
So based on all of this, Lalji Pai's pretty convinced that his investment is safe and sound.
So he's thinking, time to sit back, relax.
Exactly.
Watch those dividends roll in.
Yeah.
But here's the question for our CA Inter students.
Right.
Do those audited results and audit reports actually provide that kind of absolute guarantee?
Good question.
Can Lalji Pai be absolutely certain that his investment is risk-free?
Right.
Just because the financial...
That's the crucial point.
Look up.
Yeah, so while audited financials definitely enhance, the credibility and reliability of the information, they don't offer a foolproof guarantee against potential losses.
Okay, so those limitations again, right?
Remember those limitations we talked about earlier?
Like the subjective nature?
The subjective nature of financial reporting.
The fact that auditors can't examine every single transaction?
Exactly.
Reliance on information from management?
You got it.
All those limitations.
All those limitations, and even with the auditor's best efforts, there's always going to be some level of uncertainty.
Got it.
And here's why this is so important for you as future CAs. You can't just blindly accept everything that you see in those audited financials. You really need to develop that professional skepticism.
So that questioning attitude.
That questioning attitude, exactly, to really dig deeper.
Understand the nuances.
Okay, so Lalji Pai might need to temper expectations a bit, right?
Yeah. Audited financials are a strong indicator of a company's health. But they're not a crystal ball.
All right. Now, let's shift gears a little bit to a case study that's, well, a little more green.
Okay. I like it.
All right.
For this one, we're heading to Indore, where Good Deeds Limited is making a real difference by recycling waste from those municipal dumping grounds into usable manure.
So they're helping the environment?
They're helping the environment.
And the city.
And the city, a true win-win.
A true win-win. I love it.
Right?
But here's where things get interesting. During their audit, Zoha and Zoha, the auditors, uncover a problem. Turns out that Good Deeds Limited has received this notice from the National Green Tribunal for not following certain environmental regulations. It's not good.
And there's a hefty fine.
Fine.
Looming.
Oh, wow.
And here's the key issue for our listeners. The company hasn't disclosed this notice in their financial statements, claiming it's outside the scope of the audit. So they're essentially trying to sweep it under the rug.
Trying to hide it.
Hoping the auditors won't notice.
Sneaky.
But as future CAs, you need to know, does this environmental issue actually fall within the scope of the audit?
Good question.
I mean, it's an environmental regulation, not a financial one, right?
So that's a common misconception, and it's something you really need to understand for your exams.
All right.
Auditors are responsible for ensuring that those financial statements provide a true and fair view. And this includes making sure that all material information is properly disclosed, especially if it could significantly impact the company's financial position.
So even though it's an environmental issue on the surface, it has clear financial implications. Right? Like those potential fines, legal costs, even reputational damage, right?
Yes, absolutely.
Which could affect future business.
It's all connected.
It's all connected.
Yes.
Okay.
So this is a classic example of how non-financial information can have a material impact on a company's financials.
Got it.
And it highlights the importance of that professional skepticism. An auditor can't just take management's word for it. They need to consider all of those relevant factors, even those that might seem outside the traditional scope of accounting.
Okay, so let's kind of recap this case. Even a business with the best intentions, like Good Deeds Limited, can run into issues that need to be disclosed, right?
Yeah, need to be disclosed.
In their financial statements. And auditors have that crucial role to play.
I do.
In making sure that happens.
That's right.
Even if it means pushing back.
Sometimes you have to push back.
Against management's assertions.
Yes, absolutely.
Now, for our final case study. In this segment.
All right.
Let's turn up the heat, literally.
Okay, let's do it.
Okay.
Let's talk about a massive fire that broke out at the Noida plant of KT Limited.
Got it.
So this fire caused significant damage to their building, their machinery, and their inventory.
Oh, wow.
Thankfully, they were insured.
Okay, good.
But the insurance company, understandably, wants to make sure everything is above board before they pay out. So they send in an insurance surveyor and a chartered accountant to verify the company's books and records and to investigate the circumstances surrounding the fire. So now here's the question for our listeners. Would the CA's report in this situation be considered an audit report?
Ooh, that's a good question.
This is a great question. It really tests your understanding of what actually constitutes an audit. So remember, an audit is really focused on providing reasonable assurance about the overall fairness, accuracy of those financial statements. In this case, the CA is being asked to perform a very specific task, which is verifying the details of the fire and the insurance claim. So it's more of an investigation with a specific purpose rather than a comprehensive audit of the company's entire financial position.
So while the CA will definitely be applying,
Yes, they'll be using their auditing skills.
Those auditing skills.
Absolutely.
And expertise.
Their expertise,
Things like gathering evidence.
Gathering evidence, evaluating internal controls. Assessing the reliability of information.
Got it.
But the report that they produce won't be a traditional audit report.
It'll be a specialized report focused on the fire and the insurance claim.
Yes. So, Now, this case highlights a really important point. For those CA Inter students, auditing skills are valuable in a variety of contexts, not just traditional audits. As a CA, you might be called upon to perform a wide range of engagements, each with its own specific objectives and reporting requirements.
So we've explored 3 very different case studies here, showing how those auditing principles apply in all these various real-world situations. From a shareholder evaluating an investment to an auditor uncovering environmental issues to a CA investigating an insurance claim. We've seen how auditing is more than just this theoretical concept.
It's practical.
It's a practical skill set.
Yes.
That's essential for maintaining transparency.
That's right.
Accountability.
Absolutely.
And trust.
Yes.
In the financial world.
Very well said.
And as you prepare for your CA Inter exams
yes.
and beyond, remember that auditing is about more
Yes.
than just ticking and bashing numbers.
It is.
It's about understanding those nuances.
The nuances of business.
Applying critical thinking.
And upholding ethical standards
Right.
in everything that you do.
Well said.
Thank you.
Now, before we move on to the exciting world of assurance engagements beyond traditional audits, let's take a moment to recap what we've learned so far. We've delved into those core principles of auditing, right?
We have.
Explored the objectives, the scope, and those crucial limitations. And we've even tested our knowledge, right?
We have.
With those real-world case studies.
Real-world examples.
So are you ready to expand your horizons?
I am. Let's do it.
Even further.
Let's explore that diverse landscape of assurance engagements.
Let's go. Okay, so we've explored, kind of the ins and outs of auditing.
We have.
From the objectives and the scope to those tricky limitations.
Absolutely.
Now, let's kind of broaden our horizons a little bit.
Yes.
And venture into that exciting world of assurance engagements.
Right.
That go beyond, those traditional audits.
Beyond traditional audits, that's right.
So we touched on reviews.
Yes.
Which offer that limited assurance.
Committed assurance, yeah.
But there's a whole universe of assurance engagements out there.
It's a whole universe, each with its own unique purpose and level of assurance.
Got it.
So think of it like this. Auditing is like having a full medical checkup.
Right.
It gives you that comprehensive assessment, but sometimes you only need a quick checkup. Like, getting your blood pressure checked.
Yeah, okay.
That's where reviews come in. They give you some information, but not the full picture.
Not the full picture of your health.
Of your health, exactly.
That's a great analogy.
Thank you.
And just like in healthcare,
the
type of assurance needed in the business world really depends on the situation, right?
Absolutely, it does.
Okay.
And that's what makes it so interesting, because you're not just applying, a one-size-fits-all approach.
You're using your judgment.
You're using your judgment and expertise to really tailor that engagement to the specific needs of those users of the information.
Okay, so let's dive into some specific examples.
Okay.
I know our CA Inter students are particularly interested in prospective financial information.
That's right.
As it often pops up on their exams.
It does.
Can you walk us through what that is and why it requires assurance?
Excellent point.
Yeah.
So prospective financial information, it's essentially looking ahead.
Okay.
It's about forecasting future financial performance.
Got it.
So imagine a company wants to secure funding for a major expansion project.
Okay.
They're going to need to present their financial projections to those potential investors or lenders to show them how this project will impact their bottom line.
Got it.
But here's the catch. Those projections are based on assumptions about future events.
Right. Things that haven't happened yet.
Things that haven't happened yet.
So how can anyone be sure that those projections are reliable?
Exactly. And that's where assurance comes in. So an auditor can examine those projections. Not to guarantee that they will come true.
Right.
Remember, we can't predict the future.
We talked about that.
But to provide assurance about the reasonableness of the assumptions behind them.
Got it.
So they're essentially saying, hey, we've looked at how the company came up with these projections. And based on the evidence, those assumptions seem reasonable.
So it's like giving those investors or lenders
like a second opinion.
A second opinion.
Yeah.
Right. An independent assessment.
An independent assessment.
Of whether those projections are, built on solid ground.
You got it.
Okay.
So the auditor would really dig into things like, historical data. Industry trends. Economic forecasts.
Got it.
And the company's own internal plans and strategies.
Okay. So they're looking for anything that
they're looking for anything that supports or contradicts those assumptions and making sure that everything is properly disclosed.
And this is particularly relevant.
It is.
For those CA Inter students.
Yeah.
Because they might encounter these types of questions on their exams.
Absolutely. You might be given a scenario where a company's seeking funding. And asked to, evaluate the reasonableness of their projections. Or to identify potential red flags.
Got it.
So understanding the role of assurance in this context is crucial.
Okay, that's super helpful.
Great.
Now let's shift gears a little bit
Okay.
to another type of assurance engagement
All right.
that's becoming increasingly important. Right. Reports on internal control.
Internal controls, yes.
Now, this is something that we touched upon earlier when we were talking about the limitations of auditing, right?
We did. Remember how we said that an auditor can't be everywhere and see everything?
They can't be omnipresent.
They can't, exactly.
Right. Yeah.
So strong internal controls within a company can help to mitigate those limitations.
Okay, so talk to me about that a little bit.
Okay, so think of internal controls as the checks and balances within a company. Okay. They're designed to, prevent errors, detect fraud, and ensure that things are running smoothly.
So it's like a system of safeguards in place.
It's a system of safeguards.
To make sure everything's operating as it should.
Exactly.
Okay.
And an auditor can provide assurance on the design and effectiveness of those controls.
Got it.
So they'll examine things like the company's policies and procedures, their risk assessment process, how they monitor and review their controls.
Okay.
So they're essentially saying, we've looked at the company's internal control system, and it seems well-designed and operating effectively.
So if I'm a shareholder, I feel a lot more confident knowing that a company has strong internal controls in place.
Yes.
And that an auditor has verified that those controls are working.
Yes, it's like a double layer.
It's like a double layer of protection.
Right. It adds another layer of accountability
Okay.
and transparency, which is so essential,
Right.
For maintaining trust
Got it.
in that financial system.
Okay.
And for our CA Inter students, understanding internal controls, it's crucial. You'll need to know how to evaluate them, how to identify weaknesses, and recommend improvements.
Okay. So whether it's examining that prospective financial information or assessing those internal controls, it's clear that those assurance engagements go far beyond just those traditional audits.
They go far beyond, and that's the beauty of this field. It's constantly evolving and expanding to meet those changing needs of the businesses and stakeholders.
All right. So to wrap things up,
we've
gone on quite a journey today.
We have.
We started with the fundamentals of auditing. What it is, why it matters, how it's done.
That's right.
We explored the objectives, the scope, and those inherent limitations that auditors face.
They did.
We didn't shy away from those tough questions.
We didn't.
And we even tackled, some real-world case studies.
And real-world case studies.
To see how those concepts apply.
Exactly.
In practice.
In practice, yeah.
Remember those scenarios involving sheriff numbers?
Yes.
Environmental issues, insurance claims.
I do.
And those ethical considerations. Right. Those are the kinds of challenges.
That's right.
That you might face as a CA.
You will.
So it's important to be prepared.
Very important.
Right. And we ventured beyond those traditional audits.
We did.
Exploring that diverse world of assurance engagements.
That's right.
We look at reviews, prospective financial information, and internal controls. Just a glimpse.
A glimpse into...
Right, into the wide range of services that a CA can provide.
That's right.
As you can see, auditing and assurance, they're very dynamic.
They are.
In challenging fields.
They are.
That require this unique blend of technical skills.
Technical skills, critical thinking.
Critical thinking.
And a strong ethical compass.
Right. So to all of our CA Inter students out there.
Yes.
Embrace the challenge.
Embrace it.
Keep asking questions.
Keep learning.
Keep learning.
Yes.
And remember that auditing is more than just a profession.
It is.
It's a vital part
of
a healthy and transparent financial system.
Absolutely.
And who knows, maybe one day you'll be the one providing assurance.
That's right.
And insights to others.
Exactly.
Helping to build that trust and confidence in the world of business.
That's a great thought to end on.
That is a great thought to end on. So thank you for joining us on this deep dive into the world of auditing and assurance.
Absolutely.
We hope you found it insightful and helpful for your CA journey.
Absolutely. Until next time.
Until next time.
Keep learning and exploring.